We are back. All things HR. News Talk 820, WWBA. Alan Davis, along with the president and CEO of Human Resources, Inc., Scott Buchanan, featured in the latest edition of the Bay Area Business Magazine, BAM. And please, you can pick up a copy of that. And you get there's a whole profile of the company in there. And I haven't had a chance to see yet, so I have to ask you, Scott, this payroll tax trap that you're about to take us through. Did you mention it in the article at all, or is this just for us today?
No, I did not. It's for you. It's a goodie for you. If we get a lot of interest in the payroll tax trap, I'm sure that the editor of Bay Area Business Magazine is going to request an article on it.
Well, I'm sure she will. The funny thing is, when I first met Scott, we were talking about a number of different elements that we wanted to make sure, and that Scott wanted to make sure he brought up on this show, All Things HR. And one of the things that he pointed out, he said, there is this potential payroll tax trap for 2011 and beyond. So explain it to all small business owners out there, what they need to be aware of.
Okay, it starts with the health or lack of health of the state of Florida's unemployment trust fund. And Florida's not alone. There are 30 other states that have a similar problem. The state of Florida ran out of money in 2009 in the unemployment trust fund, which is, that's the funding mechanism for funding the first 26 weeks of unemployment benefits. So the state of Florida had to borrow $1.6 billion with a B of funds from the federal trust fund to continue payment of unemployment benefits throughout the state of Florida. Well, now those funds have to be paid back. So the question is, how is the state of Florida going to pay back $1.6 billion to the federal trust fund? There's no good source of funds. I mean, the primary source of funds would be to increase the tax on small business, the unemployment tax on small business, to fund the repayment of that loan. So if the state of Florida cannot timely repay that loan, which is now due and payable, the federal law has a built-in mechanism for repayment. The net federal unemployment tax rate, sometimes known as FUTA, is 0.8%. If the state loan is not repaid, then the FUTA rate will increase by 0.3% each year that the loan remains unpaid. So mathematically, the 0.8% will increase to 1.1% in the first year of non-repayment, and then increase again to 1.4%, etc., increasing in increments of 0.3 each year that the loan remains outstanding. The nasty part is the employers in the state of Florida and in the other states will not know what their federal unemployment tax rate is until about November of the year that the tax should have been accrued, calculated, and paid. So let's take 2011 for an example. An employer might think that his or her rate is 0.8% on January 1st, 2011 going forward. The determination date for the FUTA tax when there's an outstanding state loan is November of that year. So in November of 2011, a determination will be made as to whether the actual FUTA tax really was 0.8% or whether it really was 1.1% retroactive back to January 1st, and that's the trap.
So people have to be aware of that. Everybody has to be aware of that and maybe even budget for it at this point.
Absolutely. I mean, I'm telling our client base that we need to reserve the tax at a 1.1% rate and not at the 0.8% rate, and go ahead and put it in a fund for payment. The alternative is there's an extra bill due and payable sometime between November 2011 and January of 2012 when that payroll tax return has to be filed.
Taking that into consideration and moving beyond the next year's taxable year, would you then, depending on how much the state has paid back, because even if they're paying back a portion of it, it's about getting it all paid back to the federal government.
That's right.
And if they don't pay all of it back, whatever portion is not paid back, then that goes from 1.1 to
1.4,
1.4,
1.7, and so forth.
So that amount gets larger, even though the principal might get smaller on that. So we have to be aware of that.
That's right.
And that's going forward as of now.
Absolutely.
You need to be.
We're okay for 2010. It's 0.8 for 2010. We're okay. It's 2011.
It's 2011
that we're worried about.
Prepared for. Any chance that could get repealed? I
Well,
mean, it's a loan basically that has to be paid back. So it's probably would there be a grace period given for that? Is that up for discussion?
Grace periods have already been given to several states on their loans, and at some point in time, whether it's now or 10 years from now, the loan has to be paid back. There is a possibility with the additional Republicans in office that there will be an extended grace period, but we just don't know yet.
All right. We've had an opportunity through the course of this time with Scott Buchanan to go through health care reform, through the HIRE Act, and now through this payroll tax trap. We've got time. Tell us, when I meet with people like Scott Buchanan and HRs, you sometimes feel like, oh, my goodness, what's the bad news? And just give it to me straight, Scott. Don't give me any of the good news. But you do have lots of good news. What kind of wisdom do you offer to people as we move forward as employers, whether we're small? What kind of wisdom do you have after all these years of being in this business?
I'm going to answer your question this way. Every week I meet somebody who finds out what it is that I do. I'm an HR professional. I'm a consultant. And the first thing that they tell me is, I am so glad that I no longer have employees. I sold XYZ company 6 years ago before the market downturn, made millions of dollars. But, the worst thing about running that company was the employees. They're so crazy. And we have all these laws that we have to comply with. And I hear that every day. And I just want the listeners today to know that it's okay to have employees. As a matter of fact, it's a benefit to have employees. Don't sweat the rules, the requirements. There are plenty of advisors out there, including myself, obviously, who can help, walk a business owner through the rules in a logical and reasonable fashion that allows them to run their business like they want to run their business. But here's the question I like to ask back to somebody who says, I'm glad that I no longer have employees, but yet they're trying to grow a second or third business. I like to say, how do you take a vacation if you don't have any employees? If you don't go into the office, or if you don't answer a phone call or an email, do you feel good about that? You need bench strength in a company. If you're going to have a real bona fide company and you want to be able to spend time with your family or go on vacation, or if you want to build something of value that you can sell later down the road, whether 5 years or 10 years down the road, once you grow that company from $1,000 in revenue to $10 million in revenue, you have to have something that you can pass on to the new owner. And I would say you can't do that without employees. So, my conclusion is employees are not only a good thing, they're a great thing.
Yeah, I remember when I first met you that you had made that point that how many people who say they do have a successful business, you said, I'm trying to remember the line exactly, they don't run a business, they don't own a business, they own a job.
That's right. They created a one-person business. I use the term business loosely so that they could have a job for, themselves.
And if you can't get away from that, then what have you, are you truly successful in balancing your life if you really can't get away from it?
Unless they're, independently wealthy, I would say no. If they're trying to build something of value to pass down to their offspring or to a new owner, it's tough.
You've been listening with Scott Buchanan. He's the president and CEO of Human Resources Inc. How many years have you been in business? And you're down in St. Pete. How many years?
Yeah, we've been in St. Pete since 1996. All years in downtown St. Pete, same location in the city center building. I actually started, in finance and HR in 1983 with Deloitte & Touche. In the Atlanta office, in the tax practice, I ran the employee benefits consulting division for Deloitte out of the Atlanta office.
And so then you moved here.
I did.
Started Human Resources, Inc. You have a strong client base. And for anybody who has had the opportunity to join us just as listeners today, recap, you can make your executive summary available. We were talking about healthcare reform.
Right.
There's an executive summary that you prepared for your clients. And as a small business owner, you're going to make that available?
Absolutely. We need to give a benefit to today's listeners, and we've got three things. One is a complimentary HR review. The second is the HIRE Act flow chart, and the third is the health reform small business tax credit flowchart, all of which are mentioned or available on our website or through the radio station's website, which will link to ours.
That's newstalk828.com.
And it's www.hrinc.com.
That's HRINC.com.
Absolutely, it is.
Scott, if someone wants to be able to follow up with you, the phone number for your company, I guess it's on the website, but what is the phone number at your office?
Yep, 727-895-4700. So 727-895-4700.
And grab a copy of the Bay Area Business Magazine. Scott Buchanan on the cover. Company is featured there. It's an important time of the year for all of us who are small business owners right now. Probably a critical time to follow up with a company like Human Resources, Inc., based on the information that you're able to give us here today, whether it is in regard to healthcare reform and the benefits that actually are there and the rules and new guidelines that are coming out. Please take note of the HIRE Act if you have it, because there are benefits that you can be realizing right now, correct?
Absolutely.
And beware, there could be a payroll tax that could impact your budgeting process, and probably will for the near future.
It might sneak up on you. It looks that way.
Scott, it's been a real pleasure. We appreciate you dropping by News Talk 820 WWBA. And again, to all of you out there, this has been All Things HR with Scott Buchanan, President and CEO of Human Resources Inc.